Hey, and welcome to my channel. If you are a business owner, you run payroll for yourself or for your employees, then this video is for you. Okay, now I'm gonna break down this video into 4 sections to help you understand how payroll taxes work in your business and how you can actually utilize some of the strategies to reduce down your payroll taxes. So, like I said, I'm going to break down this video into 4 sections. First thing I want to talk about is how payroll taxes work. It's really important for you to understand this. If you already know how payroll taxes work, there's chapters underneath this video, just skip through it. But payroll tax is really important. That's the first thing. The second thing I want to talk to you about are owner payroll taxes. Now that we understand payroll taxes, what about payroll taxes for yourself as an owner on your paycheck and some of the strategies that you can use to lower that? The third thing, spouse. If you are employing your spouse in your business, how much payroll tax are you paying for them and how can we lower that or really eliminate that? So that's what we're going to talk about as well. And some year-end cool tax strategies, tax tips, whatever you want to call it. We're definitely going to cover that. Now, if you are new to my channel, my name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a YouTube video for you, the business owner, to pay less in taxes. There's a bunch of free resources you can check out underneath this video. If you love this video, please subscribe, like it, comment. I would really appreciate all of that. Now, let's cover the first thing on our list, which are payroll taxes and how do they work. It's very important to understand that you as an owner pay payroll taxes. Now, the best way to put it is these payroll taxes are broken down into Social Security taxes, Medicare taxes. You also pay what's called state unemployment insurance in most states and FUTA, federal unemployment. So Social Security and Medicare are 7.65%. Everything else makes up the difference. So whatever it is, I like to stop at a general number of 10%. So for every $100 that you pay in payroll, whether to yourself or to your employees, you basically pay $10 in taxes. So again, every $100, $10, every $1,000, that is $100 in payroll taxes. That is an additional expense on top of the payroll. Now, this is not an income tax because you already have an income tax. You already have a state tax. This is a payroll tax. That is why I always say it is super essential for you to get a tax advisor. If you do not have a tax advisor, you are overpaying in taxes. So if you have a profitable business, speak to your tax advisor how to lower your payroll taxes and some of the strategies which we're going to talk about here. All right. Let's move on to the second part of this video, which is owner payroll strategy. So for our tax advisory clients, everybody in the firm, and for my own firm, really, I use Gusto. Gusto is a payroll company. I personally don't like Paychex, ADP, or any of that stuff. Some clients have QuickBooks Online payroll, which I'm okay with, but we really put a lot of clients on Gusto because it is so easy to use. If you are interested in signing up for Gusto, I do have an affiliate link below. I think you get like $100 for signing up. Really cool company and really cool app, and we use it personally because it makes it so much easier for us when we're implementing some of the strategies to basically implement it on that app. So how can we lower your payroll taxes as an owner of your own business? The first thing you want to consider is lowering your own salary, especially if you're running an S corporation. So if you've got an S corporation, IRS says, hey, you don't have to pay yourself a high salary, you have to pay yourself a reasonable salary. So a lot of business owners overpay in payroll taxes because remember, payroll tax is what you pay as a business, which we already said about 10%. But you as an employee pay more payroll taxes, right, which is Social Security and Medicare tax. That is 7.65%. Altogether, that's about 18% of payroll tax that you are paying as an owner on your own paycheck. There's a couple of ways you can reduce it. Number one, like I said, you can lower your salary to a reasonable amount. The second thing is that if you pay for health insurance for yourself, your spouse, and your kids, you can actually include it as part of your W-2 wages, but also it will reduce your taxable Social Security and Medicare wages. So basically, it's going to reduce your payroll taxes. A lot of accountants, for whatever reason, do not use this strategy for their clients. So I like to call it 2% shareholders health insurance strategy because if you are more than 2% owner of your of your own, excuse me, S corporation, you can reduce down not only your taxable wages, but you also reduce down your Social Security, Medicare wages. That is like 18% in tax savings because it reduces entire Social Security, Medicare wages. So 18% of your payroll taxes will be reduced by basically including your health insurance premiums on your paycheck. So that's a cool trick, and that's why I like working with Gusto, because it makes it so much easier to implement. The check off a couple of boxes, done deal. Now, another thing I want to touch upon for owner payroll, if you set up a 401k for yourself, whether it's a regular 401k or a solo 401k, you can withhold the distributions, right? The deferrals, so to speak, excuse me, not the distributions, the contributions, okay? You can withhold the contributions from your paycheck and then submit it to the financial institution that you have that handles your 401k. But the bad news is that those contributions that you make into the 401k do not reduce down your payroll taxes. So it's really important to understand you are saving on income taxes, but you're not saving on payroll taxes. That's why we use some other strategies, such as the health insurance and lowering your salary to reduce down the payroll tax. So those are a couple of things that you can use in your payroll right away. Speak to your accountant and be like, hey, are you implementing the 2% health insurance for me? If the accountant says no, just fire them. Get yourself a tax advisor, especially if you have a profitable business. The only way you as a business owner can really save money on taxes, and I do this for a lot of clients, we save our clients hundreds of thousands of dollars was just doing tax planning because we are tax advisors. That is what we specialize in. So make sure you get yourself a tax advisor as well. All right. The third thing that we're going to talk about, should you pay your spouse a salary? And we'll talk about it right after this break. Hey, thank you so much for watching this YouTube video. Very quickly, if your business is making $1 million and plus, then you can save $100,000 or even more on your taxes. I put together a free training for you to learn how you can save $100,000 or more on your taxes if your business is making more than $1 million. The link is in the description below, or you can simply go to www.save100know.com. Again, save100know.com, or simply below the video, there is a link. Click on that, enjoy that free training, and start saving hundreds of thousands of dollars on your taxes. Okay, cool. Welcome back. Let's talk about hiring your spouse. So I've heard it all from business owners that say, hey, Boris, well, I tell them, like, take your spouse off payroll. Like, your spouse doesn't work. Why do you put them on payroll? Or like, if the spouse works, they pay them like $200,000, $300,000 salary or $100,000. I'm like, why does your spouse get paid so much? And then the spouse gets upset at me, like, what are you talking about? What do you mean I get paid so much? But I'm like, relax. I just want to talk strategy, okay? So a lot of times what I've encountered, with business owners is that the spouse doesn't really do like major executive work, right? They're really helping on a back end with a lot of operations, maybe clerical work, administrative work, whatever that may be. The salary for that position is much lower on the market than what you pay your spouse. So I tell my clients, why don't you lower that salary? You can lower it because I want you to save on the payroll taxes. Because remember, between paying yourself or your spouse and paying a payroll tax, that's 18%. We want to be able to lower that number, right? And remember, the 18% is, like I said, in the calculation that we talked about earlier, but we want to lower that number. So if your spouse is getting overpaid in your business's salary, number one, you can lower that. You can lower that even more if, again, you have a family health insurance. So that's one strategy that I use with a spouse. But people tell me, Boris, I want to put my spouse on payroll because I want to contribute to their 401k. And I say, okay, that makes sense, right? They especially do that when spouse doesn't work for the business. I'm like, okay, I understand why you want to do it. That makes sense as of why you want to do it. But let's talk math. You are an effective bracket of 25%. That means for every dollar you're going to put away into 401k, you're going to save about 25% on that dollar, okay? So you put away $100, you're going to save 25. But when you pay your spouse a W-2 wage, you pay 18% in payroll taxes. So let's say you pay your spouse what you put into their 401k, whatever, $25,000, $30,000, whatever that may be. The net savings are only 7%. So you're really saving 7%. And when your spouse is going to retire, take that money out, they're going to pay taxes on that. at more than 7%. So these are the things, the epiphany moments that my clients have, like the light bulb goes off, like, oh, but my financial advisor, right? So anyways, so please, if you want to employ your spouse in your business, speak to your tax advisor, come up with a strategy to do it. And again, we love to use Gusto Payroll because it helps us simplify a lot of things, including adding employee or taking off employee. I do have an affiliate link below. You get $100 for signing up. So go ahead and check that out. All right, that's the third thing. Let's talk about the fourth thing. I don't know why I did that. That's funny gesture. Anyways, let's talk about the fourth thing, year-end payroll. So this is actually really, really cool. So if you run payroll, I don't know, like some business owners run it on a weekly schedule, some run it on a bi-weekly, bi-monthly, whatever that may be. But if year end is coming up, let's say it is December 31st, and your pay period ended, I don't know, let's say your pay period ended on December 31st or December 27th, but your pay date, the day that you're going to pay your employees, could be January 2nd, January 3rd, whatever that may be. If that's the case, and if you are a cash basis taxpayer, which probably you are, because a lot of small business owners are, then the deduction is going to be next year. And if you want to accelerate that deduction, then change the pay date to December 31st. I personally do this in my own business. I think our pay date is on the 5th of a new month, and our pay period ends on like the 31st or the 30th. So at the end of the year, I just make sure that the pay date is also on the same day the pay period ends. I get a nice payroll deduction in that same year. Now, your deduction may come this year rather than next year. You may be like, well, Boris, I missed the deduction for next year. Well, not really if you do exact same thing. So it's a cool strategy. You don't have to use it. I use it for myself, use it for some of my clients. They love it, especially when we're trying to bring the income down certain thresholds to qualify for other things. So this is a great tax strategy. Anyways, I hope this was helpful. If, again, you are new to my channel and you watched this far, appreciate you. Thank you so much. Make sure you subscribe. There is a lot of free resources below this video for you to check it out. Thank you, and until the next time.